Hello everyone, welcome to the Ichimoku hourly analysis for the SP 500 for Friday, January the 28th, 2011. Well, the first hour of trading, the market was actually trending up today, and we can see this candle with a very small red body and a very large shadow on the top, and that candle actually made a higher high and a higher low in that first hour of trading, which continued the trend to the upside. That served as a warning that there may have been a possible change of trend, and all of this trading that we saw as the market was testing up above 1300 or around 1300 suggested that this was going to be a very strong area of resistance for this market. Very strong downside price rejection in this first hour of trading. Very large wick or shadow on the top of this candle that represents the buyers losing commitment in this market in that first hour. In the second hour of trading, we had a change of trend to the downside with a very, very large bearish candle, very large red-bodied candle, and on that candle we had the bears taking control, we had the bears showing commitment, and the sellers made some very, very significant net bearish progress in that hour. Continued into the third hour of trading, but importantly in the third hour of trading the market actually took out the Ichimoku cloud. And we know that the cloud can act as an area of support or resistance. And we can see here as the market was trading up around the top of the cloud, it was having trouble breaking through the top of the cloud. And the market actually traded down with the cloud as it was trending down towards these levels down around 1280. Broke out to the upside with a very bullish breakout and continued on up until 1300. Here, in the third hour of trading, very, very bearish breakout. Bearishness on a breakout like that is a very significant sell signal. Now, the other thing with the cloud here is that it was a very thin cloud. So anywhere within the cloud can hold a support or resistance. And in this case here, we had a very thick cloud, and there was a very large area where the market could find support. Here, only a very small area where the market could find support. So the amount of support that the market was going to find there was very thin. And as I'd said previously, if the market built up some momentum on the way down there, we could see a significant break, and that's exactly what we saw. In the next 3 hours of trading, we saw some fairly indecisive type candles as far as the bears went. They certainly didn't take control of the market, even though the trend continued to the downside. The trend still hasn't changed to the upside on this hourly chart at the moment. From the first hour of trading, it's been all a downtrend. But we had very long shadows on the bottom of the candle representing the sellers losing commitment. So that alerted us for a potential for a change of trend in that first time frame and some sort of retracement of this very bearish move, but that didn't happen. So what we should have been doing was watching the highs around these candles. Now we did have the cloud above here, so there was potential for resistance, but as we mentioned previously, it was very thin, so there's only a very small amount of resistance that we might expect. Final hour of trading, however, the bears took over again. They actually took out the lows from around this area, around 1276, where we saw the buyers coming in, who failed to change the trend. And we have a very large red body candle, which means that the sellers made a decent amount of net bearish progress in that hour. They've also closed the market in control, so there's a very good possibility that the market will continue trading down when we open on the next day and test down around this level around 1271. That was the major swing low, and there's a possibility that we will test that. We are now trading down below the cloud, so in overall big picture terms the market has a negative bias, and that's on the hourly charts. We are trading also below the Kijun Sen and Tenkan Sen, so the market is bearish in the medium-term and fast-term time frames as well. And we've almost had the crossover, although we don't have the Tenkan Sen above the Kijun Sen, so that is bearish in itself. That occurred up above the cloud, but that's only a fairly weak signal. But that signal that occurred there was confirmed by this very bearish breakout down below the cloud. So for the first hour of trading today, or tomorrow, Monday, we do need to watch the low of the current candle, watch the 1271 area, should hold as support. It was a very significant area previously here. We can see the market rallied substantially from there. If it fails to hold and we get a bearish breakout down below, then we could be in for a fairly bearish day. To the upside, once again, only a minimal amount of resistance overhead.